Welcome to Idea to Investment, the podcast where we dig into the exciting world of entrepreneurship and investment. We tell the stories of the tech creators doing innovative work and the investors who back them up. Along the way, unveiling the fascinating journey from the birth of an idea to scoring crucial investment. We highlight the voices of entrepreneurs, showcasing their grit and creativity, all while gaining insights from the investors who believed in those dreams. Get ready to be inspired, stay informed, and stay tuned as we explore the awesome collision of ideas and investments. Idea to Investment is a production of Tech Alliance of Southwestern Ontario.
Hi, my name is James McInnes. I am the CEO and co-founder of Oddburger.
James, I really appreciate you giving me your time and joining me on the podcast. I think I'd like to, at the start, maybe go back to the start and kind of take us back to what was the original idea. What was the spark that led to Oddburger?
Actually, we started actually in the produce business. So we really were focused on trying to get more people to eat fruits and vegetables, as a core foundation. And we worked with local farmers, and we had like a online ordering and delivery system, which back in 2014, 2013 was somewhat novel. But anyway, we really started that way, and it grew into meal kits, and then we ended up having a farmers market where we sold our veggie burgers, and the veggie burgers were so popular that we ended up just focusing on that, and that was kind of like how our burger started.
So what was it then, and what is it now, as far as innovation goes, that makes Oddburger different from traditional manufacturers then?
Well, I mean, at the core, obviously we were very focused on the food tech. So, we're creating innovative proteins and sauces without the use of animal products. And that in itself, of course, is a challenge. But you also need to be mindful of the ingredients you're putting in. So it's not just a matter of sort of making something taste like meat at all costs. Consumers want something that's also nutritious and that they can understand the ingredients. So there's a balancing act here where we want to provide consumers with something that's delicious and has a good texture, but also has some health benefits as well. So that this is really kind of the sweet spot for us.
This is a sector that, I mean, it's got a lot of history, but it's seen a lot of challenges. And I think one of those is public perception. Talk about public perception. Where is public perception now, and how has public perception towards plant-based foods changed since you started this journey, James?
Well, actually, it's funny because I think it's actually come full circle from when I started back in 2013, 2014. Again, the idea of getting people nutritious food and whole foods primarily with fruits and vegetables. Consumers today are more interested in that than I think the more processed plant-based products that came in the market probably 2018, 2019. So there was a big change, I think, in the industry where I think people kind of and manufacturers sort of created this hype about plant-based meat tasting just like meat, and it's going to bleed like meat, and this and that. We're gonna put beet juice in, or we're gonna make plant blood from heme, which some manufacturers are doing. So to really, I think, convince consumers that this was meat, or as close as you could get to meat as you can imagine, without using actual meat. So, and to be honest, I think they did a pretty good job in that, making these products taste very meat-like. And that was a big that was, I think, the big sort of hype that happened in the marketplace, where this idea that plant-based is going to replace conventional meat. And of course, 5 years later, we know that's not the case today. But but at the same time, I think we've gone back to where we were back in 2014, 2015, where consumers are really more focused on the health and nutrition, and if they want to eat a veggie burger, they'll just eat a veggie burger. They don't need to be tricked and fooled into thinking it's meat. So
They don't need the veggie blood, right?
Right. Yeah. The veggie blood maybe is not something that people really need. So, which, I mean, to their credit, maybe was a bit of a marketing tactic. And I mean, it did work very well for them. No doubt about it.
So one of the reasons we wanted to get you on the Idea to Investment podcast is because of your, I don't want to say unique, but it is a bit of a non-traditional journey to funding Oddburger going public in April of 2021. So what inspired you to go that route instead of raising traditional investment, or did you have an idea right from the very beginning, or how did that play out for you?
Well, I mean, I think all entrepreneurs in the back of their mind, I think, believe that one day I could take my company public. I mean, I think it is a good and noble goal for all companies to think about that because I mean, fundamentally, it provides a big liquidity event for investors that have been in investing in your company for since the beginning. Um, there are practical benefits to doing that, and I think that's reasonable. Now, for us, what we saw was really that the industry valuations were incredible at the time. So it was more like an opportunistic sort of thing, and this is actually really how going public really does work is that you need to be in the right sector kind of at the right time, typically. So, it's very hard to go public in a sector that is not hot, for example, because you're just a one-off company. Whereas when you're part of a sector, there's a lot more capital that tends to come in. There's a lot more speculation, of course. Valuations can get, quite out of control, I think, in some cases. But this is how the stock market works. If you look at the dot-com boom and bust, you look at cannabis boom and bust, plant-based is no different. And after there is a real long-term business there, of course. So, but yeah, I mean, the reason that we went was really we got a great valuation. It was easier to raise capital in the public markets than the private at the time, and less dilution for founders and shareholders.
So then, had you had a fair bit of experience before your decision to go public in looking for funding, and what did that look like? Not helpful?
No, it wasn't that. Like we were doing, small to medium-sized funding rounds as a private company before we went public. Um, but it was an opportunity, I think, to get a lot more funding in the company, and really diversify the investor base substantially. Because when you're a private company, you're typically just funded by friends and family, and when you go public, of course, that does change quite a bit. But yeah, the research, leading up to it was definitely extensive. We spent a lot of time sort of understanding just how do you do it because it's such a daunting sort of task. Like, where do you even start if you want to go public? So, now we of course know that and know how that all that works. But yeah, I mean, it was a big learning curve for sure.
So what were some of kind of the big stumbling blocks for you? Like what now do you wish you had known about the process of going public before you started that process?
I think there's I mean, you learn a lot. I mean, there's no doubt about it. I could probably list 10 things. But I think the thing is for companies that are looking to go public, you need a combination of things. You need number one, you need a vehicle to do that. So typically a shell company, a publicly traded shell, which you would take over, or actually they would take over you. It's called a reverse takeover.
Mhm.
But basically, you essentially do an amalgamation with a public company, and that's part of the process. Then you need an investment banker to sponsor it, of course, and then you need investors to invest in the deal. So those three kind of things all need to come together at once, and that is the challenge. And of course, it's not cheap to go public either. There's a lot of legal fees and accounting fees, so you have to be ready for that. Um, but I think the one thing that to be aware of is that just because you're a public company doesn't mean it'll be necessarily easier to access capital down the road. It's just another mechanism that other companies don't have if you're private. So it does give you lots of options, lots of mechanisms, but then again, your valuation is also very out there because it's just based on your share price. So it is a big change, I think, for many companies that decide to do it.
Once you do go public, how does that change for you? I mean, now that you've got investment coming in, like that moment you go public, what changes?
Well, and this is the kind of surprising thing, which happened to me and every other public company. When you go public, you've basically started another business. And it's weird to think about, it's surprising, but it's a whole other business and has nothing really to do. It sort of has something to do with your actual business, but it sort of doesn't either. And the business really is your stock, the business of your stock, and that business it needs separate marketing, it needs separate operations, it needs separate PR, it's a whole kind of entity, in and itself. And the surprising thing is I think really you have to treat it as a separate kind of a separate business, and do things that are going to affect just the stock sometimes, and they may not affect your business, and you need to put resources and time and energy into getting your story out there with investors, for example. It's not something that you normally need to do as a private company. So there's this whole world called investor relations, which is a big industry, which, I mean, people, charge money to help you get access to investors. So you kind of enter this new world, and with that new world is, new ways of financing your company. So the big advantage of being a public company is that you don't have to really argue about valuations too much because you're a liquid and tradable stock. And you have this mechanism of issuing shares. So, for investors, they can get shares that they can trade out of. They don't have to wait for some liquidity event to happen down the road. So, there are advantages to it, but of course, there's a high cost to maintain a public company. So, it's big legal costs, big accounting costs every year. And if you're not using the tool, then it just becomes a giant, ball and chain on the company, that you're like maintaining this thing for no reason. Like, if I'm not like raising capital with it, or I'm not like getting shareholders like return on their investments, then why have it? So this really does change quite a bit. Not that it's good or bad, but I always tell people it's your classic double-edged sword. It has advantages and disadvantages, and it's not right for every company, and definitely it's you can make the argument for why it should be public or private. I think people ask me that all the time, like, why'd you go public? And it's a definitely a good discussion point.
So you go public on the TSXV in April of 2021, and then eventually launch on the OTC QB in the US. I mean, did you basically take everything you learned from your initial launch and then apply it to the US? And what was the thought process about going to a US investor base?
So when we did our OTC listing, it's a dual listed stock. So we trade both in Canada and the OTC. We actually also trade in Europe on the Frankfurt Exchange. So companies will have a primary reporting jurisdiction, which for us is still Canada, still Ontario, and BC. When you go in and you dual list in the US, for example, you now give Americans the opportunity to invest directly in your stock in US dollars, so in their own currency, and they can also access it from other brokerages. So they don't need to get access to a Canadian market. They can just access the US market. So it does open up the investor base quite a bit. But it's not when you list on the OTC and you do a list, it's not nearly as rigorous as like an IPO or an RTO in Canada or the US. So it's not like you don't have to file like a prospectus again. You don't have to. You don't have to do all the heavy lifting again when you go on OTC. Now, when you go in a NASDAQ, that's a different story. So
Sure.
we did do a NASDAQ uplisting. We did get approved by the SEC. But again, the timing things didn't work out. Just because you're approved doesn't mean that it'll actually happen. So we kind of got caught in that scenario where you can hope and you can plan, you can try to list, but it may not happen for various reasons.
once you are more readily available for US investors, how does that impact like your approach to growth south of the border? Like, does it impact your business model as far as growth in the US goes?
Well, I mean, let's put it this way. US investors want to see US growth and US centered
Hmm.
businesses, right? At least in part or in full. So, I think there is always, a keen interest to, establish a US presence or a US business if you don't already have one. So in our case, we did just that. We really pushed forward with franchising in the US. We pushed forward with a lot of initiatives in terms of, um, you know, redesigning our packaging for like English only and uh and that kind of stuff. But yeah, I mean it's I think it does set this kind of new expectation for a foreign company that you will eventually expand in the US, which is of course why people invest in companies early on, because they can see the potential of let's say you're doing really well in Canada and it's a great concept. Now you bring it to a market 10 times bigger, and that's exciting for US investors. And they like to get in before or during that transition.
It's kind of an interesting catch 22 as well. Like you said, investors want to get in early on board with an innovative company like Odd Burger at the start, and then you go through this growth period. You go public, you expand, but how do you maintain that kind of startup environment when you've got such a now complex public vertically integrated business?
Yeah, I mean it's hard because it's kind of this double-edged sword when you're a small cap company, right? Or micro cap company. Like your market capitalization, even though you're public, may not be big enough for lots of funds to invest in, or mutual funds, or even lots of investment advisors are limited on the types of companies they can invest in. So you kind of fall in this category where you're a higher risk investment for people that invest in public companies, and you're not enough risk for people that are looking to invest in private companies to take them public eventually and get out. Like in other words, like your market cap, your valuation is already probably too high. Um, well, hopefully anyway. So you have this kind of like, so you can fall in this middle zone, which isn't great. Like you want to try to, like, you don't want to stay there forever, but it's just the reality for lots of young public companies, and something that I think you just have to grow out of it, basically.
So then what would you say personally would be your biggest kind of leadership lesson as Oddburger has kind of evolved from that startup to a public company?
Well, I think the biggest lesson, and again, this was kind of like early on, and it wasn't just a
Mhm.
lesson for me; it was a lesson for I think everyone in the industry. Was that just because the markets and the capital markets environment has been a certain way for 20 years doesn't mean it's not going to change like next month. And you can sort of assume that it will. You can hope that it will be the same, but the reality is you may not be able to raise more capital again, like you could previously. So in our situation, for example, we were in a very, very hot sector. We were able to raise 4.3 million on our IPO. I probably could have raised 10. Um, but I didn't, because the market was so hot, the sector was so hot that the going sort of opinion was that you might as well wait until your share price goes up and then do a raise at a higher share price, because the sector is so hot and you guys are a great company in a hot sector. So it's kind of this magic combination of things coming together.
It,
Uh,
mu- it must have
yeah.
been hard though to leave that money on the table. Kind of feels like you're, you know, hedging a bet, I guess.
Well, I mean, like, listen, I mean, I think we can always go back and say, I wish I'd raised more money when I could have. When we originally did the IPO, like it would have been much easier and better for the next 3 or 4 years. But the reality is you can't think that way, and you have to just understand that you did the like when you start a public company, you also don't know everything. You're learning stuff too, right? And you don't know you don't know the intricacies of funding, with the public company. You have certain assumptions that may not be, well informed, basically. So yeah, I mean that's definitely like a challenge. Sort of, running a public company under a very, very, I think, rapidly changing economic environment we've seen in the last 4 years.
So Oddburger is more than a restaurant chain, a burger chain. It is a manufacturer as well of frozen food. So why was that an important thing to bring that food innovation in house?
Well, we've always made our own food, and it's something we've always been proud of, and we've always made it here in London, Ontario. So it's always been very locally focused business. Even though we have restaurants all over Canada, and our retail lines now in over 600 locations across the country, we're still a local business that uses Canadian ingredients primarily. But the importance of manufacturing food, I think, really comes down to the fact that you have control over the recipes, control over the formulations. You can change your formulations too more rapidly. You can choose, for example, how big a run you want to do. So you can do smaller production runs, and you don't have to order like as much inventory, which has a risk, right? Like, let's say, for example, you you launch with five different frozen products and one or two of them don't sell that well. But if you've ordered 500,000 packages of each one with the assumption that they're all going to sell equally, then you find yourself sitting in a bunch of inventory. So it does help you manage inventory, I think, better, because you can choose the size of runs you want to do. It helps you manage the innovation, it helps you keep your trade secrets of your formulations and your recipes. And also, you're not subject to someone else's business plans. If a lot of companies, and most companies in the food industry do use other people to manufacture their food. So they will pay a company, and they will say, hey, make me this, and they'll say, sure, we'll make you that. Here's how much you have to order. But the reality is they're these co-manufacturers are businesses just like every other business, and if they have an opportunity to make more money doing something else or servicing a bigger customer, then you can get dropped, and you can be in a situation where you can't produce food anymore. You have to scramble to get another manufacturer. It's sort of a different set of problems. Not that it can't be navigated, but I think it's something that we're always looking at, of course, like as we grow, because we can't necessarily always assume that we're going to meet demand with our current facilities. Sometimes you get a big order and you may not be able to. So we're still sort of like understanding how different strategies around that, but so far we've been able to manage very, very big orders. Like for example, we got in 7-Eleven Canada nationally, so that was a huge order.
Yeah, that is exciting. A partnership with 7-Eleven, rolling out to 500 plus locations. So maybe talk a little bit about how that deal came together, and what that means to Oddburger.
7-Eleven in Canada anyway primarily is a West Coast brand in terms of number of locations. So they have something like 400 locations in BC, and then like 150 locations the rest of Canada, or something like that. So they are very focused in BC. And when we opened our Vancouver site, I invited the decision makers from 7-Eleven to our grand opening there, and they really did get to experience the brand and the hype and the excitement around Oddburger, and of course try the food, and of course we gave them the retail packs to try at home, and it's a long vetting process and long listing process, probably maybe 6 months end to end by the time you get it in store shelves for us.
Wow.
But that's how it started. It started with them, really coming out and seeing what we do, and just loving the food, and loving the brand, and believing that this is something that can work at 7-Eleven.
So did that alter things like within your manufacturing significantly? I mean, now you're preparing to deal with convenience and retail on this fairly large scale. How did that impact things within manufacturing?
Well, we had to bring on a new distributor. That was one, because we had to bring a distributor that's more focused on retail. So that's where we brought in Dot Foods, and Dot Foods is like a distributor to distributors. So in other words, 7-Eleven has their own distribution network. They have their own warehouses where they store food. But as a vendor, you have to get the food there somehow. So if we're making food in Ontario and they have 5 distribution centers all over Canada, then we have to get the food to all 5. And for us to ship that direct is expensive.
Yeah.
So that's where we brought in a specialized distributor that does just this. It it cut our distribution costs substantially versus doing it ourselves. And just allows more inventory to kind of be held for big customers like 7-Eleven. So we that's one thing that changed. Our distribution changed a little bit. Well, actually more than a little bit, but substantially with Dot. And then also just increasing our output. We really just focused on how do we increase output, how do we increase efficiency. So for context, like now, half the food that we make is for consumer packaged goods for grocery stores, and the other half is for the restaurants for food service. So we've effectively doubled our output, in the past like few months. So that's a lot more output when you double. And to be honest, I think we still have another at least doubling to do by the end of September. We're sort of predicting with some more retail accounts and such. So yeah, I mean that's been hard. It's been hard to grow very fast, and for companies that are growing fast, they'll kind of understand that sometimes the growth can put a financial strain on companies, which most people don't really realize that. Like, why would you be financially strained if you're growing so fast? But you have to buy the inventory, you have to get the bags, you have to a lot of upfront costs, right? And you may not be getting paid for like 2 months, depending on your payment terms. So
Mhm.
it does take I think a very sort of nimble approach when you're in this kind of high growth situation.
So it's interesting timing too. You see this fantastic growth in the retail space, thanks to these partnerships with 7-Eleven and with Dot Foods. At the same time, pausing U.S. restaurant expansion. Now, was that clearly it was an intentional thing, but how much was that a result of what's happening with the border and dealing with the situation in the United States?
Yeah, I mean, there was two factors involved. One factor is, of course, we're a proud Canadian company, and we want to put Canada first, and we want to be here to supply and support Canadians through what I think is going to be a very difficult time. So, and we really did, see an opportunity for expanding, our product line in Canada. And that did happen with 7-Eleven. So we had this, very big deal happening in Canada anyway, and it was going to really take a lot of our resources. It really didn't make any sense for us to try to bring our products to the US. It's just too hard to price something that is constantly changing. So instead of trying to like navigate the tariff situation and try to be on pins and needles every day, we just said, forget it. We're just going to really focus on Canada. We're a Canadian brand. We're made in Canada. We use all Canadian ingredients from Canadian farmers. We're as like Canadian as you can get. So, so when you combine both those factors together, it just didn't make sense for us to expand to the U.S. And not that we're never going to do it, but
Mhm.
it's on pause for now until things become more clear.
Yeah, uncertainty is never a good way. It's never a good place to grow when there's uncertainty. So,
Exactly.
what does success look like for Oddburger? Let's say 5 years from now, when you look back, well, what will you say? Yeah, that's how I wanted to make an impact.
Like Oddburger's goal really is to fundamentally to deepen our supply chain and deepen our integration into the food system. So when we look at kind of where food is going and where food tech is going, there's a huge need to produce protein sustainably. And when I say, and this is why I now use the word protein, because whether that is those cells that come from an animal or a plant, at the end of the day, people need protein and good quality, affordable protein, in whatever form that comes in. And there's lots of amazing technologies happening with cultivated meat, with fermented dairy technology. A lot of really interesting things that I think could lower the cost long term, but also fill the need with consumers for again quality, clean protein. So Oddburger really, I think, my goal in 5 years is to be, a very, very, very big player in the protein industry, um, uh, as a whole. And Oddburger, the restaurant chain, is part of that test. The retail products are part of that. I think scale up, right? So if things work in our restaurants and we develop new proteins, We can launch those in the restaurant. We can launch those in grocery stores, and scale it tremendously. So more products, more uses of proteins, more diversification in types of proteins that we're using. Yeah, I mean that's really our goal fundamentally, and I think if we can get there, that we'll have a lot of success as a company.
Well, I think regardless of the sector, a lot of investors probably look at you, James, and Oddburger as a grand success. So I think it would be great if you could offer some advice. So what would you say to a founder making that leap from an idea to searching for investment, and then potentially, like you said, the end goal being going public? Someone right at the beginning of that journey, what kind of advice would you offer to them?
Well, it's I always go back to the reason why I did it, because it's the easiest way for me to explain something, and I believe that I did it for the right reasons. And I think you have to do something that fundamentally you believe in, and fundamentally that you think is going to change the world in some way, and hopefully in a positive way. I think that's the other thing, is that is this going to be a positive? I mean, it's one thing to make money, but it's another thing, are you actually, doing something that you can feel good about, and that in 30 years you can look back and say, I actually did something that was important and that affected the world in a positive way. And I think if you have that passion, you really have that core foundation of why you're doing something, then investors will see that passion, and people will notice that, and they'll invest in it. Because frankly, if you don't have that, then other people do. So and if you're in the wrong space, and if you're in something that it's maybe a good business, but I don't know if it's going to be something I believe in, I think I would say keep searching and keep pivoting the business, and really follow the data, like make sure that customers and investors understand that you are, not only are you doing what you believe in, but also it's supported and backed by data, whether that's sales data or acceptance data with number of users, or whatever you're going to do. I always tell people, follow the data. It's another good piece of advice.
Well, James, I cannot wait to find out where Oddburger goes from here. I'm sure you can't either. And really appreciate your time today and joining me on the podcast. Thank you so much for your time, James.
Thank you so much for having me.
Idea to Investment is made possible by Tech Alliance of Southwestern Ontario. If you'd like to learn more about Tech Alliance and the resources available to entrepreneurs and startups, go to techalliance.ca. My name is Ken Eastwood. Thank you so much for joining me.